Hello everyone, this is Jack from eSpeed Consultant, and today I'd like to walk you through an important update regarding the recent expansion of Malaysia's service tax, particularly focusing on rental income and how small and medium enterprise can qualify for exemptions under the new rules. On Sunday, 29th of June 2025, the Royal Malaysian Customs Department released 5 service tax policies all at once. One of the key highlights is the introduction of service tax on rental income, which will come into effect of 1st of July 2025. Starting from that day, an additional 8% service tax will be imposed on rental income, while the original threshold for taxable rental was 500,000 ringgit per year. The Ministry of Finance recently increased the threshold to $1 million, which is certainly a relief. However, this still means that many SMEs will experience an increase in their fixed rental cost by 8%, making operational expenses heavier. During RMCD's seminars, they clearly emphasized that this expansion of service tax applies not only to companies, but also to individuals who earn rental income. So the question is, how can SMEs qualify for an exemption for this rental service tax? There are 4 possible routes to exemption. The first exemption is through a business-to-business mechanism. For example, if company A rents a space to company B, and company B subleases it to company C, then company A's rental to company B may be eligible for tax exemption. This is to avoid double taxation in the B2B rental chain. The second exemption applies to non-reviewable contracts. If a lease agreement is signed with a non-reviewable price clause, meaning the price cannot be changed during the contract period, and certain conditions are met, the rental service may be exempted from service tax for a period of 1 year from 1st of July 2025 to 30th of June 2026. The exemption involves intra-group rentals. When a company provides leasing service to another company within the same corporate group, the rental transaction can also be exempted from service tax. The fourth exemption is for micro and small enterprise. If your business falls under the official definition of a micro or small enterprise, your rental income or rental payments may be exempt from service tax, but only if certain requirements are fulfilled. Previously, this exemption applied to companies with annual revenue under 500,000 ringgit, but now the threshold has been freezed to 1 million ringgit, which is good news for many small businesses. However, there are still specific conditions to meet. Tenants must register their micro small enterprise status with RMCD through the MyPMS system. They must also declare their annual revenue to RMCD every year. No SME Corp certificate is needed. Qualify, the annual sales turnover must not exceed 1 million ringgit, based on income declared to the Inland Revenue Board. If RMCD discovers there's any information provided is inaccurate or false, they reserve the right to reclaim the service tax retroactively. Now let me share a few personal thoughts on this policy. Firstly, this 8% rental service tax is a heavy blow to many businesses, especially when consider it alongside the broader expansion of both sales tax and service tax happening at the same time. On 1st of July, Singapore Daily reported that this chain reaction or excessive ripple effect could result in price increases of up to 10% to 20% across many goods and services. This is probably inevitable. Honestly, maybe it's time to reconsider reintroducing GST, which offers more clarity and structure. Secondly, regarding the exemption for micro and small businesses, although it's a positive move that the turnover threshold has been raised to 1 million ringgit, it's still difficult for new business to qualify. Why? Because the exemption is based on declared income reports. And if you are a new company without prior tax filing, you are essentially not eligible. Even if you meet the revenue criteria, there's a real disadvantage. There are also many unclear areas in this policy that RMCD has yet to clarify. For example, if a property has multiple owners, how should the 1 million ringgit threshold be calculated? What about foreign property owners? If I rent a space and sublease it to someone else, how do I determine the exempt portion of the rental? These questions are still unanswered. We sincerely hope that RxCD will provide clarity guidance soon so that business can properly plan ahead and remain compliant. Policy may change again in the future, so be sure to always check for updates from the relevant government authorities. Thanks for watching, and we'll continue to keep you updated on the latest tax developments. If you found this video helpful, feel free to share to your friends or comment below. I'll see you in the next sharing. Bye.